Central banks around the world are purchasing shares of the stock markets in order to prop them up. I've covered this before in other videos talking about how the Bank of Japan is doing this and how in the US other central banks receive incentives in order to prop up their stock markets. And today I will show you how the Swiss central bank is actually admitting to buying its own stocks. That's right. So we'll take a look at this today because you came here for the truth. So I'll unveil that for you. Let's get right into it right away. In 2013, the SNB increased the share of its equities in foreign currency investments from 12% to 16%. It expanded its equity portfolio to cover equities of small cap companies as well as equities from advanced economies that had previously not included. So right here, it's not only admitting to doing so, it is increasing the amount that it has done. So what does this tell us? That all around the world, we are watching and witnessing history being made where countries are not able to support their own stock markets, and they are doing so by printing money out of thin air and then buying up the shares directly. They're not even doing it indirectly by stimulating the economy to get those shares to rise. They are actually buying up the shares themselves. And you can notice this with specifically the disparity that has occurred in many of the stocks. Now, a lot of them are down significantly from their peak, but you look at other ones that are up right now, and which is pushing the market higher, and that's what's happening right here. If you look historically, other than in the past few years, you'll notice that in general, and this is a very wide generalization here, but all of the stock market moves up together. You look at, there's different pockets. You have the general economy that moves together, and then you have different sectors that move together. But overall, when the economy is doing well, you have things moving up together within the stock market. But right now, there is a major disparity. There's all this dislocation that is occurring, and this is probably the primary cause of that. So let's get into some other details here today, and we'll connect this all together. EU says Starbucks' very low Dutch tax deal may be illegal. This is out of Reuters here. And the reason I mention this is that the corporations have gone far beyond the laws that you and I have to abide by. And this is no different than what has happened in any fascist or communist or any other totalitarian system that we've seen throughout history or even today. So this is exactly what's happening right now, as we see this going in with the corporations actually having their alumni in the highest positions of government, or if you're in the EU, these technocrats that sit above the government, they are not elected, and essentially making the rules, but the corporations always exist above that, and they're making their own regulations, they're making their own laws, and they are going around all forms of taxation, the same taxes that you and I have to pay. And guess what? They keep increasing. Let's take a look at this. Out of CNS News, federal tax receipts set a record for October. And this shows you, if you can't see here, from the 1976 to 2014, and overall, on average, going up year over year over year. They keep making more money, and ultimately, they continue into a more of a deficit every year. How is this possible when they're bringing in more and more money from the taxpayer, and at the same time they are becoming more broke? Well, the fact remains is that they are squandering this money, and it is being used for foolishness. The government can never, on average, get lower on the amount of debt that it has to pay back. This system is designed so that it has to go into deeper and deeper debt, and this is just one very good example. I wrote about this in my book, talking about, if you haven't read it already, Robert Prechter's book, At the Crest of the Tidal Wave, an excellent book that is actually not very common, but it was very enjoyable. It said, the years following the post-war prosperity comprised the peak of the U.S. empire. And the highlighted portion I wrote says, when you adjust for inflation and compare the purchasing power of the dollar to actual goods, challenges for the taxpayer have only become more difficult. And that is, as I say often here, that is the most important thing. We're looking at this news, we're looking deeper in, we're digging deeper, we're trying to realize the truth. But why? Because we need to know what's going to happen to our dollars versus actual goods. We need the money. Unfortunately, the system runs around money. We need it to buy simple things like our food, our shelter, to pay the taxes that they impose on us. And essentially, we require this. So at the end of the day, we need to know where our money is going. And we're looking at this right now and seeing that year over year on average, it's getting worse for us. If I continue on out of Bloomberg, Portugal finds Chinese make 90% of the bids at the property sales. And right here at the bottom, it said about 90% of the bidders for the government-owned apartments and stores on offer were Chinese. This is quite... there's many sides to this here. You can think about it just from the Chinese perspective, but let's look at this in a different way. The individuals in Portugal who are suffering from massive amounts of austerity, and they are forced to take on all these different loans from the IMF and all sorts of other types of suffocating strangleholds that the bureaucrats have put upon them, it's leaving them not able to purchase their own assets within their own country. And as a result, it has to be bought up by the foreigners who are buying it at a heavy discount. This will in fact be something in all countries around the world as the pain begins to spread, as the dominoes fall. I have said this many times. I talked about it in my book, and we are seeing this take place right now. This is the BIS, the Bank for International Settlements, saying this: what are some of the implications of excessive debt? Something that I talk about often. And right here they said, the first and most obvious is the buildup of the financial imbalance risks of a future financial crisis, an impaired financial sector, and a debt overhang. All things that I talk about here consistently, practically every video. We're looking at a collapse scenario. We're looking at another financial crisis. Why? Too much debt. They cannot pay the amount back. And the BIS is concerned. I'm concerned. I know you are concerned. And this is what we have to look into. We have to realize this is very serious things. When even the the central bank of central banks is coming out and actually publicly stating this type of information. We've seen the IMF make similar comments. We've seen the OECD making similar comments. And we know that this is getting serious. It's getting to that point at the peak where even the central banks, even the Swiss central bank, needing to go in and buy up the shares. This is very frightening. And right here, weather and tight supplies drive U.S. cattle prices to a new high, right out of Reuters. But you know what? I really don't think that the weather is the cause of everything that they claim. The real reason is that you're printing money out of thin air and you're sending it out there. And what is happening? It's increasing the nominal value of everything. And that's how this works. You print up money, it causes inflation. What is the true meaning of inflation? It is the increase in the monetary supply, and that's exactly what's happening. This money is being devalued every single day. And the very last thing I want to get into today is out of the New York Times. Conflicts in New York City parks as homeless population rises. We're looking at homelessness, poverty, and unemployment increasing to epidemic levels. And this is going to show you how bad the real economy is. Do not look at the stock market. I consistently get trolls on this channel. We hear them in the news. We're looking at all the financial channels and how ludicrous their statements are when they say that everything is just fine in the economy. Well, it's not all pretty if you look at the real situation. As I said, the poverty and the unemployment is rampant right now in many areas around the world, not just in New York City. Look at the stats and have a look for yourself and realize for yourself how bad things are getting. And then from that point, you need to make the preparations. I personally recommend buying up real assets, whatever that means to you. As long as it's real, you're not going to have the fragility and the risk that paper assets has intrinsically. If you found this video informative, please give me a thumbs up. Share these videos on your Facebook and your Twitter and every other social media platform. And of course, subscribe to the videos on YouTube and join the nearly 9,000 subscribers on here. And we will continue to make more videos, share the information that we do have. And of course, last but not least, don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.